Good morning, this is Graham Bivy on the 22nd of April 2015. I've been compelled to send you this special Camtasia regarding China and the unprecedented profits that may be presenting themselves now in that market. As most of you will know, I've been in the investment game monitoring market trends, cycles for over 35 years, and China reminds me right now of the early days of the bull run in the Japanese stock market of the 80s. Now, those who have followed me for some time will know that last July I signaled a breakout in the Chinese stock market. So I've just got the Shanghai Composite Index on here, and I just want to show you here how trend lines work and support and resistance. So this line here, this red line, is showing us basically where the market stopped rising, and there's lower tops, they call these. This means that sellers are coming in quicker, so they're not waiting for the price to rise so much before they're selling out. And this is called a support level here, which basically shows us that at this level, for some reason, buyers are coming in. They're not letting it fall any further, and they're buying. So then we've basically got a competition going on between the sellers coming in at a lower level each time, but the buyers coming in at this level. And then we had this breakout of July last year, and now we're hearing all sorts of reasons why the Chinese stock market's going up. And this is the breakout here. And if you've got my Camtasias in July, and if you watched any of the programs I've been on TV, I also signaled the breakout. And the Chinese stock market has gone from 2,000 to 4,293 in just something over 8 months, which is pretty good. And then we try to put on some support angles. Chinese stock market's not been that easy to play because you've needed to find either stocks, which then you need a wide variety of stocks, or better still, you find a fund. And there are funds called exchange traded funds, which are listed on the US stock market. And these are available and actually part of the component of our Insiders Club FOS, which is Fund Optimization Service, where we basically use ETF to access over 46 markets worldwide and sectors, commodities, currencies. And right now, as you will gather from last week's Camtasia, I'm really positive about that service because we've had major breakouts, and I think being led by China, because China will drag everything up. Now in China, the Chinese have been really hot on property, but there's been a lot of measures put in to tighten that market in China, in Singapore, and in Hong Kong. And more recently, there have been constraints put on the Chinese investing, gambling, if you like, in Macau. So it seems like now people are looking at the stock market. Now that might worry some people, it doesn't worry me, because I know global investment managers have been saying for some time that the Chinese stock market on a relative basis is perhaps the cheapest it's been for some time, but it wasn't in a bull market. And just to show you what I mean about that, this is the Chinese stock market going back to, here's 2000, this is late 2000, and recently, to the breakout, we were at the same level of 14 years ago. But when this market takes off, these things can happen. You march them up to the top of the hill and you march them down again. Now, I know that this is the early stages of the Chinese stock market opening. 95 was, and I saw that with Japan. So I think we're in a new secular bull run in China, and with it, it will raise a lot of ships. I think it'll benefit Asia, the wealth creation that's going to happen. Now, are you participating in fortunes that can be made in China? If you're not, I suggest either you go and just buy an ETF and cross your fingers, or you maybe join the Insiders Club FOS, where we invest in a range of exchange traded funds. Now, you know, I was the chairman of the technical analyst, taught the diploma in technical analysis, and I just want to show you these lines, how they show you trends. So this line, this gradient here is showing me the supply and demand for the Chinese stock market in 2006. And then we accelerated off here into a much steeper rise, which means the demand was increasing. And then when we fell below this and then failed here to get up to this previous high, that told me the market was turning over, and then we're into this downtrend. And you know, there was a breakout in 2009, but other than that, it's been difficult. And then we're in this competition phase here, as I mentioned earlier, with resistance here, with lower tops, support here, and hey presto, here comes the breakout. Now, just putting that into a daily chart, that's the breakout. This is the trend. We almost look like we were breaking down here, but the support at this level, which is this resistance level, then we accelerated off. Then again, there's a breakdown here, which would have been a sell. You never be afraid to sell, because it's all about protection from the downside. And then, of course, this didn't progress down. We moved up. We broke above this high. We found support here, and then we had another breakout here, and off we went to the races. And this ETF here is a pretty good ETF. You know, we were invested in Yin, YINN before, but it is extremely volatile. Here it is. Not really following the stock market as a whole. It seems to be a bit over the place. You know, this is July. You see it broke out, but then it collapsed back and didn't really go anywhere. So I've been searching for another more reliable China fund, and here it is. So it broke out in July at just below 30, and it's 60 today. Whoa! But that's only the beginning, because China hasn't gone anywhere in 14 years. It's had the strongest economic growth of any country in the world, but the stock market, you see, doesn't work as most people believe it works. And it's been lying there dormant, and now it's rising. China is rising. The wealth creation that will happen through the stock market is going to be enormous, but you really have to follow these trends with stop losses. And Asia as a whole, you know, is breaking out. Hong Kong is following the same thing. It's not so great, but it broke out in April, so that's kind of following it. What else have we got on here? This is emerging markets, again, breakout. So I think emerging markets in Asia are going to do well. Thailand, it's just broken out here. I can just show you how I do this. It's not rocket science, and it's not an exact science. So we just try to place trend lines in where previous resistance was, and you can see we've just had a breakout. If we go above 85, it's even more compelling for Thailand. But I think Asia just looks great, and I think after been reasonably difficult time for Asian markets, it's now looking good. This is Asia ex Japan, and again you'll see resistance levels are kind of around here, and boom, we've broken out. We've even gone above the previous top. So let's put this on. This is all a big consolidation pattern following the rise from the lows of the global financial crisis, and now we've moved to new highs. So once you get a breakout, if you follow the direction of the breakout, and the longer the sideways move before the breakout, normally the greater the move is to the upside. And I'm really excited because I think we might be entering an era which I saw in the early 90s when basically Asia went up 100% per annum every year from early 90s to around, the Asian financial crisis caused a buckle in that. In 97, but the bull markets went on to 2000. This is Philippines trying to join in the fun. This is Singapore, which is broken out, looking good. Taiwan's not broken out quite yet, but overall, I think emerging markets. Let's look at Korea. That's been on a bit of a move. See, breakout here. Breakout here. There was sometimes you get false breakouts, and you just got to live with that. Here's the move here. Boom. Try to break out here, broke back, but this low is higher than this one, so it's still bullish. This moving average has turned up, and we broke out, and it's gone from 58 to 61. So I had to get this out to you because if you're not going to prosper from China, well, I think you've got rocks in your head. You really need to get your investments looked at. You need them proactively managed. And inside, if you're an expat and you're living offshore, great, because in most instances you can accumulate these profits tax-free, especially if you put them in the right structure. And if you're in somewhere like Australia and you've got a self-managed super, this is ideal. The world is your oyster. You can invest in Korea, Russia, Europe, wherever the profits are. We can take advantage of it because I'm one of these markets on a daily basis. And if you're one of my existing clients and you're not in the Insider Club FOS, I suggest you allocate some money to that strategy. Just pop me an email, either at ceo@richmondth.com, and I do thank those people who have already sent me and sharing in what's going on. And if you haven't and you're not sure what to do or where you are, I'm here to help you. So this is an abnormal Camtasia going out, because normally I try to send them out on Fridays, sometimes Monday. But the Chinese market is moving. The train is moving. It's left the station. You need to get on it to profit. You need to be in it to win it. So this is Graham Bivvy saying I'm so excited about what I'm telling you about, and I look forward to hearing from you and you profiting from what I believe is going to be 2 sensational years. One for my Insiders Club, where I'm doing undervalued stocks with superior earnings growth, because I've got the best list I've ever had. And I told you that a million times. And now I think our Insider Club FOS is about to experience one of its best years ever. So Graham Bivvy signing off after 12 minutes and 30 seconds.